Hello, and welcome to another update video on FET. The Fetch.ai chart obviously remains a key altcoin chart that's worth watching, just because it is one that a lot of people are interested in. It's very much a very popular AI altcoin. However, the price action has not been bullish in recent months. If you followed the video updates over recent months, then you know that the pressure appears downward still. There is currently nothing clearly bullish on the chart. The orange scenario here for further downside was communicated as most likely and preferred scenario over the recent weeks, and it made sense because the move to the upside from the November low was only a three-wave move up. I can see no impulsive price action to the downside, but again, a C wave can be an ending diagonal pattern. And in ending diagonal patterns, the subwaves are all corrective. So we had 3 waves in wave 1, 3 waves in wave 3, 3 waves in wave 5. And so this is what we are tracking at the moment. And this move up, that was really just a high B wave, on early in November. What I said to you before is that really to consider a meaningful breakout, we need a break above 50 cents. That hasn't changed. I'm not saying that for fun. It really is the case. I explained that also in our member live session yesterday again. We looked at, I think, more than 30 altcoins. There were maybe not even a handful of bullish charts, okay? So from that point of view, that it's always a great read of market sentiment. So that we see some downside pressure today, not massively surprising, given the overall sentiment read that we, did yesterday in our live session. But anyway, what I can tell you is that the 50-cent level here remains a key level, and that is because the downside pressure started then. And there is a sell wall up there, at least it's highly likely. And this is where the volume started to kick in, the selling volume, on the 10th of October. So I still don't see anything clearly bullish here, but we'll monitor this support zone between 15.6 and 20.7 cents for a possible reaction. This is an important zone because it is here that, at least I think wave 4 could start. Quick explanation, I treat this decline as an ending diagonal. In an ending diagonal pattern, the C wave can be a 3-wave move, a 5-wave move, but the subwaves are 3-wave patterns. So the third wave is an ABC, and then there should be a wave 4, and the 5th wave should also be an ABC. So we are likely in the late stages of wave C of 3. What I can do, I can give you Fibonacci resistance for the 4th wave, the possible 4th wave bounce, okay? Which is here. That's Fibonacci resistance between 27.7 cents and 31.5 cents. This is our Fib resistance zone. And any further downside should ideally avoid a break below 15.6 cents, because if that happens, we're falling back into the larger pattern. So basically we are in a correction that started a while ago, but then here the local correction started on the 11th of October after that immediate recovery rally. And not bullish action, absolutely not. But I will watch this area for support. So that's the update on FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, then make sure you also check out our X channel for additional updates, charts, news, and much more. FET is also covered there regularly. So in fact, before this video update, I updated it on X. There's a link in the comment section. Check it out. Thanks so much. Bye-bye.